Hello, good afternoon. This is Adam Tuiaana with RJO Futures here in Chicago, coming to you the afternoon of Thursday, July 11th, 2013 with your soft commodities rundown, getting towards the close of the soft commodities markets here. Starting off with the sugar. Sugar last traded at 16.10. That's in the October futures contract. Put sugar down about 15 ticks on the day. We've been watching that 16.48 level pretty closely. We did violate that level last week, and today actually was yesterday's price action, I should say, was actually an outside day down, and so we're seeing some follow-through selling because of that technical pattern. In addition to that, we've seen some consolidation in the price action. Been really choppy over the last week or so. We did have a challenge of the major downtrend line that was in place. We got up there, broke above it a little bit, but basically we came into a lot of resistance, so it's continued on downward. Fundamental side, a lot of bearish news out there with an overwhelming supply of sugar that's out there, so that's helping to keep some pressure on the sugar market for the time being. There had been reports in Brazil of some dock strikes, dock workers that are striking out there in Brazil, which some thought could support the market a little bit, has not. And in addition to that, dollar's been very weak. The US dollar's been very weak, so inversely, usually that should offer some support to sugar, and it's not doing that today. So I think more down is to come. Upside resistance for sugar is going to be 16.48. That 16.48 level again is now our resistance area. And on the downside, support is going to be at 1600, just that psychological 1600 even level. We'll keep a close eye on that. Moving over to cotton, which last traded at 85.07 in the December contract, puts cotton down a very big day down 172 ticks on the day. A lot of this has been because of some poor weather that has been forecasted. The market has been rallying, but it has come in at kind of some decent resistance, and that rally has been because of some poor weather in West Texas. Not enough rain, and that had been in a drought for a long time, so we're continuing to see bad forecast for not enough rain in the West Texas area. As far as the old crop goes in the southern delta, they are actually getting or have forecasted a lot of rain out there for the old crop, and that could actually add some damage to the old crop that's out there. So they're expecting more rain. These fundamentals should help support the market long term, but right now we're coming into some resistance there. We're also, overall, the long-term picture is going to be China. They had an ugly PMI numbers that were out there. I think overall their economic news has been pretty poor lately. Their potential second quarter GDP is expected to be lower, and they have some falling and dwindling exports that are out there. So I think this is going to affect, those numbers in China will affect the grains markets and also cotton as well. So for the time being, I'm looking at a little bit more down, a steep correction on this cotton for the time being, back into its trading range. It should be on its way back down at least for a little bit. 87.25 is going to be our upside resistance, and on the downside, 84.32 is going to be our support. So please keep in mind that futures trading and options on futures trading does present substantial risk. It is not suitable for all investors out there. Aside from that, have a very good afternoon. Thank you.